Good morning. Welcome to Stock Market Today, Friday, February 15th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider, all hitting your inbox before the market opens each trading day. And just a quick reminder on that, Monday is a holiday, President's Day here in the U.S., and markets will be closed. So U.S. equities were mixed on Thursday, but finished off their lows from the morning. The Dow and the S&P finished lower as the NASDAQ and Russell 2000 closed in the green. Consumer staples and financials lagged. REITs, communication services, and healthcare outperformed. Treasuries rallied with the curve steepening. The dollar was down against both the yen and euro, but was stronger against sterling. Gold down 10 basis points. WTI crude settled up 90 basis points on the day, and seeing some strength there over the past few days. As we get to the desk this morning, futures are up 20 basis points and near the highs of the morning. Asian markets were weaker overnight, with China, Hong Kong, and Japan all down at least 1%. European markets are higher this morning. Treasuries are unchanged. Dollar is stronger versus the euro, but flat versus yen and sterling. Gold up 60 basis points, and WTI crude tacks on another 60 basis points of its own. So what do we have here for the S&P 500? We're churning around the 200-day moving average. Support in the 2680 to 2720 zone, then below that 2600 to 2630. Resistance is in the 2800 to 2815 zone. RSI stalls below overbought levels. We've been talking about this for a while, that the strong rally here off the December lows has not been able to produce an overbought reading for the RSI, and now we're getting a little bit of a stall out. If you really want to get in the weeds on it, it's a slight negative divergence at this high from 2 days ago. I think that would be quibbling just a bit. Chaikin money flow is bullish and remains near 12-month highs. So for me, and we're going to look at some of the key relationships and themes that I watch to get a gauge of risk sentiment and risk appetite in the marketplace. For me, there are some encouraging signs, but there are also some signs of caution. It makes sense that we'd be churning here around the 200-day moving average, just below these resistance levels. I think you want to use pullbacks to support, to identify leading stocks in leading industry groups. Think software as a great example of that, as we've seen for the past few weeks. Isolate other situations that look like that. And then as we're watching the market, we just kind of want to be dynamic and situational. We want to buy pullbacks, but we also want to be cognizant of the fact that breakouts are likely going to be important. So just in the middle here, wouldn't be surprised to see some churning around the 200-day moving average, as we have seen for the past 3 days or so. Your market in a minute. What am I talking about in my note to Chaikin Analytics clients today? Well, stocks end the day mixed. We talked about that already. Russell 2000 and NASDAQ closed higher. Small caps continue to lead large caps to start the year. That's one of the encouraging signs that I've seen. As well, semiconductor outperformance is encouraging. We'll take a look at both of those charts today. On the kind of risk stalling side, high yield stalling relative to treasuries. I also keep an eye on a ratio of copper to gold, and that is starting to move lower once again. So those two indicators point to some signs of caution in the marketplace. Futures point to a higher open here today. Major indices from a power bar perspective continue to improve. Dow, despite being down 15 basis points yesterday, 6 bulls to 6 bears. That is an improvement to flat, where we've been bearish for the past few weeks. S&P 500, slight downtick in the number of bulls. We have 117 bulls, down from 120 yesterday, 64 bears. NASDAQ, positive on the day, 28 bullish or very bullish stocks, 11 bearish or very bearish stocks. Small caps were your outperformer. 511 bullish or very bullish stocks within Chaikin Analytics against 330 bearish or very bearish stocks. Bonds rally in price, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish. Major indexes are mixed. Our stock of the day today is Providence Services. Comes to us from other consumer discretionary. Stock closed at $71.59 yesterday, up 2.24%. Power gauge rating is very bullish due to very strong earnings performance, very strong price volume activity, as well as very positive expert activity. 20 factors within these 4 categories get rolled up to make this very bullish power gauge rating. So what do we have here? We have a very bullish stock with a strong trend, strong industry group, type of name we want to consider. We also have what we refer to as a personality change. And what do we mean by that? Ribbon at the bottom of the screen tells us where the power gauge rating is and has been over the past 12 months. And you can see we've been neutral since July, also underperforming the market since that time frame. But look what's happened recently. Power gauge rating has turned to very bullish, and the stock is beginning to outperform the market. So this personality of underperformance has shifted to a personality of outperformance, while the power gauge rating goes very bullish and Chaikin money flow turns bearish. Stock retakes the long-term trend line, which is beginning to turn higher. Now, we've had a nice power move higher here. We are overbought. But these personality changes are something that we watch closely. I've added Providence, ticker symbol PRSC, to my bullish watch list, and I'm going to keep an eye on it here, because if this endures and overbought, oversold gets closer to oversold, then this is a compelling stock. I don't want to chase it here, especially with resistance up here right at $75. I don't want to chase here. I want to give this some time to consolidate, continue to outperform, work off the overbought reading, and then look for a buy signal or an opportunity to get involved. I have it on my watch list. I'll be keeping an eye on it closely as a potential bullish idea in the weeks ahead, but I don't like chasing it now, especially with the market kind of churning around that 200-day moving average. I want to give this one some time to play out and set up a better entry, but the personality change is notable. Sector tracker now, looking at the movement of the major sectors over the last 5 days. Energy strong move higher, with the price of oil now a leading sector over the past 5 days. And remember last week, I started to talk about some diminishing downside momentum in energy. We're going to keep an eye on that, watch it closely. Industrials, we've talked about that one shifting into a market leadership role. That continues to be the case. Nice to see tech at the top of the list as well. We're going to look at semiconductors in a little while, a very important group within the technology sector. Healthcare, regaining some of its footing after breaking down on a relative basis. All the major groups are positive over the last 5 days, with a bit of a risk-on type atmosphere, with real estate staples and utilities making up 3 out of the bottom 4 performers. Financials being held back a bit as rates continue to move lower. Industry in focus today is transportation services, which over the past 6 months we've been kind of cautious on, and that's been the right play as it's underperformed the S&P 500 by a little over 4%. However, that power bar ratio, which measures future potential, is very strong. Look at this, 15 bullish or very bullish stocks for 0, count them 0, bearish or very bearish stocks. Earns transportation services the #1 rank of the 21 subsectors that we track, moving up 7 slots over the past week. Some of the indicative names there: Atlas Air World, AAWW, very bullish rating. SAIA Inc., SAIA, very bullish rating. We looked at that one yesterday, said we're going to keep an eye on it because it was overbought. Rider Services is overbought as well. Bullish stock, ticker symbol is letter R. But AAWW looks interesting to me. Very bullish stock, strong trend, strong industry group. Type of name we want to own. Let's be cognizant of the fact that they are set to report earnings next Tuesday before the market opens. I'll give you this little sun here to indicate time of day of earnings. However, this is another one that's exhibiting a personality change. After being neutrally rated and underperforming the market since August, we're now outperforming the market with our very bullish rating. We have an oversold stock rounding out of that oversold condition, bullish Chaikin money flow, and we've regained the long-term trend line. Compelling name to look at here. Now, the setup is there to own the stock, but let's just be mindful of earnings. If you want to hold off and wait for earnings, I can understand that. If you want to maybe potentially play for upside from earnings, but do so in a risk management way, you can look at some options setups, in particular maybe some call spreads to try to take advantage of upside to earnings, but limit your downside should we get a negative announcement. Obviously, not making a call here on earnings, just highlighting what we're seeing. You can see we've broken this downtrend line. I think if you want to get involved, I can't argue with it, but you want to do so in a risk-managed way. Trending names now, yesterday's movers. All of the leaders from yesterday are earnings related. MRO up 9%, EQIX 7.25%, IQV, it's a name that we've liked for a while, up 7%. Vulcan Materials trying to turn the corner, up 6.5%, and Zodis ZTS 5.7%. CenturyLink, a lot going on there as it pertains to their NOLs. It did catch a couple of downgrades, sends the stock down 12.5%. IFF down nearly 9% on earnings. AIG down nearly 9% on earnings. Coca-Cola down over 8% on earnings, did catch a downgrade today, and MGM down nearly 7% following their earnings announcement. I will point out that Wynn is trading lower in the pre-market here today. Thursday surprises, NC beats by 9 cents, AEE missed by 4 cents. NVIDIA the earnings report wasn't great, but the stock is trading higher here today. Arista Network trading higher after they beat by 15 cents. PPL beat by 3 cents. Before the open today, we're going to hear from 4 neutrally rated stocks. Big one that's going to be on everyone's radar screen is going to be Deere. Not seeing anything trading there in the pre-market just yet, but Newell, which reported this morning, is down by 11%. Also keep an eye on the report from Pepsi following the release from Coke. Obviously, it's a Friday, so we don't have much going on after the close. And remember, Monday is a holiday. So let's talk about small caps continuing to lead large caps. We're looking at IWM relative to the SPY here. So Russell 2000 relative to the S&P 500. We were bearish on it, bottomed with the market now beginning to move higher and starting to outperform, taking out this resistance level. I'm looking at this November high, these November, December levels. A break of those really would be encouraging. We still do remain below a declining long-term trend line, but I think the path of least resistance is likely higher here in the near term, and here's why. Momentum. Momentum seems to be shifting. This is the RSI, which looks like it's shifting into bullish ranges following this positive divergence at the low here. Notice how RSI was becoming oversold down here in October, and then the low in December was also oversold but made a higher low. That's a positive divergence, sets the stage for this breakout, and likely a continuation higher as momentum has shifted into bullish ranges. As well, on an absolute basis, IWM has broken this downtrend line and continues to work higher. Now, there is some resistance in the 155 to 157 zone for IWM, but small cap outperformance is encouraging from a sentiment perspective. It shows a willingness of investors to take on a little bit more risk as opposed to what we saw throughout the back half of 2018. Semiconductor outperformance is a bullish indicator. Now, we talk about this one a lot. The reason we talk about it a lot is because I think it's that important. Here's SMH relative to the S&P 500. Notice it topped out long before the market did. Began to roll over before the market topped in September and continued to do so. But bottomed in November and started to make a series of higher lows ahead of the market's bottom in December. And look at the RSI of the ratio. The RSI of this ratio has made a series of higher lows as well, as it appears to be shifting into bullish ranges. We've retaken the 200-day moving average here. However, I don't think we're out of the woods just yet. I want to see a break of this September high to really give me confidence that this trend has some steam behind it, especially if it's confirmed by momentum. But it's just interesting to notice that the semis topped ahead of the top in January and rolled over and continued to decline ahead of the top in the market in the September-October timeframe, and then bottomed ahead of the market. Semis are a leading indicator, and their continued outperformance is a bullish sign for the market. One of the things that I'm looking at, though, that points to a bit of caution in the near term is that high yield is stalling relative to Treasuries. HYG relative to IEF, nice move off these December lows, and now stalling out here below the 200-day moving average, below resistance. RSI can't really get much traction as it remains in bearish ranges following this oversold reading. It's a little bit sign of caution from a risk perspective in the marketplace. Something to keep an eye on. You notice that it topped coincident with the market, bottoms coincident with the market. So that's it for today, folks. Have a great weekend. I'll see you Tuesday.